Welcome to the Transparent FX Academy. I'm Nick and I'm a top author on TradingView with over 190k reputation points. If you're new to the channel, make sure you subscribe. This is the place to go for high quality, free trading education. Now, without further ado, let's jump straight onto the charts. In this video, I will be speaking about NZDJPY. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect of this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing. And by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here on this pair. Now, starting from the monthly time frame, what we can see is that we have a market which at the moment is testing a quite strong level of previous monthly resistance, from which all this previous rejection to the downside was created, which is now turned support here, 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 and again here. And as we just tested this zone last month and rejected it to the upside, we could expect more bullish continuation away from the area. Dropping down on the weekly time frame, what do we have? Well, from a weekly perspective, we can identify the support in an even more precise way. We can see that every single time that the market tested its zone, it rejected it to the upside. And at the moment, we are in the middle of this rejection. So we could expect more bullish continuation for the market to go and reach this high, as already happened in these previous rejections. In fact, if we look a little bit at the bigger picture here, we can identify how actually the market is currently trapped in our range from a weekly perspective. We have the top of the range here and the bottom of the range here. Now, in a situation like this, we could expect this market to continue to be trapped in between this resistance and support. But since the last two times we had the test of the bottom, it could now be the time that the market goes and tests the high of the range. So once again, more bullish continuation could be expected in this specific situation. Going down on the daily time frame, what do we see? Well, from a daily perspective, this is where things get very interesting. In fact, what we can notice is that we have a market which just created this overextended W formation. Now, in general, after the creation of an overextended W, what you would expect is for the market to create a correction at least to the 0.32 of the Fibonacci taken on the impulse leg, and then after that you would expect the continuation to the upside. So what we could expect here is first a correction and then more bullish continuation. If we want to measure the first target to the downside for this correction, we would need to take our Fibonacci from the low to the high of this impulse, which gives us a first potential correction zone to this 0.32 of the Fibonacci taken on the daily impulse, which is also lining up perfectly with this previous daily resistance that is turned support. Now, this creates confluence of support at this area that if the market will go and retrace to it, from here, there is a good probability of seeing more bullish continuation and a rejection away from that support. Now, if we go and see what we have when it comes to the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, and we check the data precisely for the NZD, we can see how with the last reports, net positions have been increasing in the short term and decreasing in the long term. In the short term, we went from minus 8k to minus 3k net positions, making the NZD stronger. In the long term, we went from a positive net positioning down to a negative net positioning. So in the long term, NZD is getting weaker. In the short term, it is getting stronger. So in a situation like this, we could expect a potential rejection to the upside, but overall then from the top of that range, we could expect more bearish continuation. So this move to the upside would just be a potential short-term move to the upside. Before then, when the market reaches the top of the range, there's a good probability there to see more shorts getting added and essentially the NZD continuing to be bearish. So Let's move to the JPY and see what we have. Well, from a JPY perspective, things get quite simple because the JPY is getting extremely weak. We went from having the top here at minus 20k net positions. We're now sitting in minus 68k net positions, which is essentially more than 3 times lower in net positioning. So institutions have been adding a lot of shorts, going from 42k shorts all the way up to 82k shorts that we're currently having. So the JPY is getting very weak, and a weak JPY is exactly what we need for this move to the upside. So even though the NZD overall by itself, it is not really getting that strong, the JPY is getting weaker than the NZD. Therefore, NZDJPY could easily create this rejection to the upside. But first, we would like to see the correction to the downside for the completion of this overextended W formation. So approaching here the situation one step at a time, first, we will need to see the potential completion of this W formation at the neckline. So how we could be approaching that? Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing, potentially also with students, is monitoring price action from an intraday perspective during this move to the upside, waiting for the market to shift from an intraday bullish market as we would have to an intraday bearish market. And if the market would shift from an intraday bullish to bearish market and provide to us one of our valid entries, at that point we could be looking for a potential rejection to the downside for the completion of that overextended W, at least at the 0.32 of the Fibonacci taken on this daily impulse, and essentially at this previous daily resistance turn support. Now, if you don't know what I'm speaking about when I say valid entries and these kind of things, you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website. Here, you have the possibility to gain access to my entire courses with all the rules of the strategies. You also have the possibility to gain access to one-on-one private mentoring, the web market breakdowns with the Telegram signals, the COT data software, which is precisely the one that we used in this analysis, the trading station software, which puts together everything you need as a trader all in one interface. And if you scroll lower here, you will see that you have the possibility to join directly from here to gain automatically access with the email and password that you will create during the checkout process. So definitely looking forward to have you on board. If you enjoyed the video, make sure you smash that like button and comment below. It really does support the creation of more free analysis education and updates for all of you. And I will see you in my next breakdown.